India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a festive time, and as you can see, all of us are in festive attire. We are coming to you this morning, as always, from our studios here in Mumbai. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, hi, good morning.
Nigel, I think we know who the winner is today, right? Look at Prashant, resplendent in that festive mustard yellow. But yeah, I think it's just a good vibe, good feelings, and it is finally Diwali.
Well, that's right, and the markets as well seem to be coming to terms with it. Last couple of days have been good, so we're feeling more festive this week in comparison to the end of last week. So good times. I
think the market is also supporting
finally.
By the way, I just wear what they give me. So, anyway, let's just quickly. That's a beautiful looking set, and it's just looking lovely, absolutely stunning. Well, let's just quickly run you through what you need to know as you begin and we start another fresh new trading session. I think it's looking good. Not just in the US, it's looked good in the US for a while, but even here in India, where the market actually has seen a correction and now it's drifting higher. So last night, Nasdaq hit a fresh all-time high. We ended about 0.75% up. The S&P 500 lesser so, about 0.16 or so. Now, you had Alphabet numbers which came through, and I think the numbers came towards the second half of the session. Actually, if anything, the Nasdaq came off a little bit after the Alphabet numbers came. I think Alphabet, the Google stock, post hours, post New York closes, actually higher. There was a conference call with analysts, etc., and we'll put out more details there. Some of this is making headlines in terms of what was said, not just specifically company-specific, Alphabet-specific, but also AI adoption, etc. at Google. Now, macro data in the US was mixed. So you've got strong consumer confidence numbers which came through, but you've got job openings, the private job openings, which came through at the lowest level since early 2021. Remember, Friday, 2 days from now, we get the jobs data. The monthly jobs number, which I think is one of the most important things to assess labor market strength or weakness. The 10-year was down about 3 basis points, 4.25, and I was saying this yesterday. If you look at yields, you look at dollar, you look at equities, all are in a way pricing, or rather not pricing, but priming for a Trump win. But as you go closer and closer into the voting day, the 5th of November, that basically people would want to take some of those bets off, and maybe not go completely full up, because if you look at polls, etc., polling data, etc., it just still looks like it's, the race is in an absolute dead heat, split right between for Harris and Trump. Now, some of the data points, you've got oil prices, which are unchanged. 71.45 is where we left off as of yesterday. We get numbers from Meta. So, this is the week where we have 5 out of 7 magnificent 7 companies reporting, and Meta reports earnings tomorrow, post New York close. All right, let's just circle back to levels here for the market. So, we had a decent close, 0.5% plus on the Nifty, 2% on the Nifty Bank, 1% each on the mid-cap and the small-cap indices. So for the Nifty now, the resistance comes in at 24,567. It's the recent swing low, basically. Minor, but it's important, about exactly 100 points away from where we left off yesterday. Then you got the 20-day moving average, which comes in at 24,832. And that's really the big one. The Nifty Bank, by the way, has already crossed that. Supports come in at 24,150, which is nothing but the low that we saw over the last 2 days, approximately the low that we saw over the last 2 days. So this is the broad setup. Bank Nifty is next. We closed decisively above the 20-day moving average and the 40-day exponential moving average with that 2% higher close. And here, we got to get above the 61.8% retracement of the entire fall from the all-time high to the recent low, which stands at 52,835. And on the way down, the Nifty Bank support stands at 51,157. So that's the broad setup. As I've been saying, if you're trading, you need to be really nimble because you've got large, very large events lined up over the next 10 days or so. Jobs data this week, of course, earnings before that, all the way with US elections, Fed decision on the 7th of November, etc., etc. So it's a big one, the next fortnight or so. GIFT Nifty will come up on your screen, give you a sense of how we are likely to start. Is around about 30-35 points or so. Surabhi.
Well, absolutely. So the thing is that we've got a positive handover from Wall Street, but Asia is not picking it up entirely. The color is a mix of red and green across Asia this morning. Some of the mainland China and the Hong Kong markets, they're a little weak, but the Nikkei is continuing the good form. However, I'd say that the Diwali mood is setting in. And I think in the gold markets, the Diwali mood set in several months ago. It's astounding, the move now. If you're looking at the December contract, the near-month contract on COMEX, that price is almost touching $3,000. And sometimes it makes me wonder because this is the fastest pace of rise that we've seen on gold in the last, many, many years. I think in the last 2 decades for sure. Just the sheer speed at which gold prices have gone up, 30% up this 1 month. So I don't know, is the gold market telling us something little uncanny? Kind of gets me a little worried at the margin, but anyway, for now.
I mean, the gold market, the basic idea is that Trump will, those estimates, right? $7.5 trillion of fiscal expansion over the next 10 years.
Extremely expansionary
That is
policies.
inflationary. And gold is the best hedge against inflation. So at the margin, incrementally, that also is kind of pointing to...
Is leading to this, the latest move, which is taking the price almost to $3,000 to the ounce. I mean, it's clearly linked to a lot of politics in the US. And of course, you have enough to deal with on geopolitics. Anyway, that's on gold. Coming back home, over to our neighborhood. By the way, in the US as well, of course, Prashant mentioned Alphabet. The other one was AMD, and that was a sharp reaction on the way down in after hours, 8% down because of the guidance, which the market didn't quite like. Tomorrow, we'll get the first print of the third quarter US GDP. The estimates are running at around 3.1%. So that's going to be an important data point to keep in mind as well. And speaking of macros, tomorrow is also BOJ Day. Thursday is when the Bank of Japan will meet, and it's the first time after the election result. In Japan threw up a far more mixed picture with the ruling party losing its majority. So that's going to be an interesting meeting to watch as well. Now let's talk about India and why I say it is beginning to feel a little like Diwali, because yesterday, of course, we had the second day of a follow-up with green continuing on the screen. And then if you look at the earnings post-market hours, a fair amount of cheer there. It's more good than bad. So just to give you some examples, Voltas has been in line, Marico has been in line. Marico is talking 5% volume growth and pretty steady demand and very good demand on the rural side, twice as much as urban demand. So that sounds good. On Voltas, the numbers are more or less in step. There is margin expansion year on year as well. Hitachi is a very, very bright spark. A lot of institutional investors own Hitachi, and it's a stock that's always seen very, very expensive, but the execution, the numbers are adding up. So that's the good news. The profit has doubled. The margin has expanded 170 basis points. All those who hold Hitachi will be very happy to see that the earnings are delivering in step with the stock price as well. Keynes has been a blowout number. No problems there. It's along expected lines. Revenue is up 58 to 60%. PAT is up 86%. And margins have improved as well. The niggling issue continues to be around, lenders and BFSI companies, those asset quality concerns. They'll come back in when we talk about SBI Card, because the gross NPA ratio has increased, the credit cost has increased. So we need to watch out for this. But as I'm saying, it is Diwali mood and Diwali feeling, and that's showing up in the FPI numbers as well. Because after a long, long time, the FII number is not in 4 digits. The sell number is just about a 550 crore net sell, and that was offset quite nicely by the domestic institutional buying. So overall, looking quite good. Nigel, over to you.
Well, the Nifty Bank, that's going to be the key constituent to look at. And on Monday as well, we made this point that though there was doom and gloom, but bulk of the Nifty Bank is performing, and that's what could lead the Nifty Bank higher. And that's actually played out. Now, the question is, can the Nifty follow suit and follow what the Nifty Bank has done? Well, yesterday it went ahead and broke those technical levels. So that's going to be a key point to look at. In fact, if you look at the Nifty Bank, and you pull up a chart that comes up for you on the screen, yesterday it conquered the 20, the 50, as well as the 100 DMA. So clearly it was a very, very good trading session. And in a matter of 2 sessions, they've taken out all these 3 levels. So that's good news out there. What's helping? The FIs, double engine firing out here. They were selling 15,000 crores on October 3rd. That came down to 5,000 crores, which is now down to around 550 crores. Point number one. Point number two, what about the F&O market? Well, out there, we're seeing a short squeeze. So from around 1.7 lakh contracts on the short side, that's come down to around 91,000 contracts on the short side. Tells you the power of short covering as well. Massive one is what we're seeing out there. So that's played out in favor of the bulls. Options data comes up for you on the screen. Well, yesterday you saw the 24,500 call that was earlier seeing writing. These bears, they were packing their bags. They were saying maybe this market has got too much momentum. And that action has shifted to around the 24,700 odd mark. On the downside, though, there were some mixed signs at around the 24,400 odd mark. So that's the important mark. You don't want to see unwinding on this strike, which takes us to the levels. I've been making this point. We're in a broad 600-point range, which comes up for you on the screen. We're closer to the upper end of the range, but you'll want to get past, that 24,550 mark. Then look at the 100, then look at the 20 DMA. So those are the important marks. If you're looking at resistance, that's the way it flows. The Nifty Bank as well, good session yesterday. It broke that 51,500 mark. That was a resistance mark, which now becomes the important support zone. It has the 20 and the 100 DMA around those levels. So the Nifty Bank plays out the weekly expiry. Will the Nifty catch up with what the Nifty Bank has done? Let's break those crucial technical levels. Today is the session.
All right, Nigel, thank you very much for that. So that's essentially the setup as we start this morning. Phu Kien Yap is with us. He's Senior Investment Strategist at Standard Chartered Bank. He's with us in the program. Phu, great to have you with us here. Thank you for your time. So the US, NASDAQ hit a fresh all-time high. And now a few days to the US election. What's the roadmap really? Generally, post-US elections, we see a rally. Is that the... lots of inputs and how close it is or all of that. But post-elections, if you're going to take a slightly, say a 10-day out kind of a view, what's the roadmap looking like for equities?
Hi, Prashant. Morning to you. Good to be here. Yeah, so the US elections could lead to volatility in the near term, but I totally agree with you. Beyond that, once there's more certainty as to who is going to be in power, we do expect US equities to follow the historical path where it would be we do tend to do better after there's more certainty. It is slightly concerning that it has been very strong in the lead up to elections. Typically, we would see some sort of consolidation heading into the election. But this year, actually, we're seeing the market being very strong heading into election. But do expect some volatility as the results come through when the election happens on 5th November. And then beyond that, though, I think what's really going to be the key driver is the expectation that the US can avoid a recession in terms of the Fed rate cuts coming in to support growth. As long as it can avoid recession, growth is continuing to come. I think we're seeing decent numbers so far. So as earnings growth continues with the US economy humming along, that's going to be supportive for US equities. But the opportunity right now we see really is with the US government bonds. We've seen some part of pricing. The market is really pricing in a bit of a clean sweep for the Republicans. And as a result, you've seen US Treasury 10-year yields. Went above 4.3% yesterday. We see a bit of resistance at 4.29%. But we do see it as attractive. What we're telling investors is that this is a good opportunity to average in to the government bonds because we do expect the yields to come down. And so it is attractive. And we're saying it's a good time to lock in the high yields at the moment in the US government bonds.
Okay, Phu, that's interesting. So, yeah, the market seems to be completely primed for a Trump win. But you're saying this is a good time to buy US bonds because eventually those yields need to move down. So, taking that point, also tie this in with what's happening to, to gold. We were just discussing that. The relentless move on the yellow metal, whether you still think it'll keep attracting this kind of money. And again, we have the BOJ meeting tomorrow, right? And this is going to be interesting because there's been a fair amount of debate on what happens now, whether the electoral outcome will have any bearing on the way the BOJ is going to sort of behave from here on. We've seen the huge weakness in the yen as well as the US dollar and the yields have strengthened. What sort of do you see in this equation going forward? And what impact will it have on just the flow of money and the choice of asset classes?
Yeah, no, thanks for that. Gold is something we do like. We had a $2,800 target price over 12 months, but it's already fast approaching that. But look, we do have an overweight view for gold. we think within a portfolio, gold is absolutely very helpful in terms of the diversification benefit it comes. If inflation does pick up with the policies coming in from the Republicans, we think it benefits. But also, as the real yields come down, we think that is good for gold and geopolitics as well. Another thing, we've seen that possibly de-escalating a little bit now. But if it does hit up again, gold is a good hedge. So I mean, within the asset classes, clearly we do have gold as an overweight view within there. Now you touch on the BOJ. I think our expectation is that they're still on a path towards raising interest rates. I think the expectation this week is that perhaps they won't do anything, but our expectation is that they're still going to respond to the pickup in inflation. There is a bit of uncertainty with the surprise loss of the majority by the LDP. So now they have to do a bit more discussion in terms of following a coalition for the government. So a bit of uncertainty in the transition to the government there, but we do expect the BOJ to be independent, having to respond to inflation. We expect them to be raising rates. So that trajectory in terms of the impact on the Japanese yen, as you say, dollar yen has been going up. I think, as I saw, above 153. As it gets close to 155, we think there's intervention risk from the Bank of Japan. So our preference would be to lean against the dollar yen move, i.e. Seeing it coming down, i.e. a stronger yen, dollar yen coming down, especially when it approaches 155 with a risk of intervention there.
All right, folk, we'll leave it there. Thank you very much for joining us. Appreciate it here on CNBC TV18. So that's the word coming in as far as global markets are concerned. Let's quickly run you through what's coming up here in terms of corporate interactions and otherwise over the next 2 hours or so. So 8:35, you'll hear from the management of Maruti Suzuki, and they discuss, as we discuss second quarter earnings. There are a couple of downgrades coming in from brokers this morning, and Maruti stock was, of course, a loser yesterday. 9 a.m., you'll have the V-Mart management, Tier 2 retail demand, value fashion. How's it doing? So you'll hear from V-Mart. 9:20, Dheeraj Agarwal of Ambit Investment Managers will be a market master of the day. 9:30, you'll hear from the Canara Bank management on their earnings which have come through. Saurabh Chawla of GMR Group will be with us to talk about the airport business and how that is looking. 9:50, Hudco will come in with their second quarter earnings and disbursals, outlooks, etc. 10 a.m., you'll hear from the management of Container Corporation on their earnings. And at the end of the show, it's our special, somewhat special. Lata will be in conversation with Sridhar Sivaram of Enam Holdings. So that's the lineup. A packed one, as always. Stay with us. We're going to take a quick break, but we are going to be back. Actually, let me just quickly tease out the stocks that we're going to talk about in just a bit from now with our research team. Marico, Voltas, Keynes, Hitachi, Allied Blenders are stocks which are on our radar on the back of positive news flow. Honeywell, Star Health, Container Corporation, SBI Card, and Torrent Pharma are stocks which are likely to open in the red on the back of new earnings and news flow. Stay with us. We're back.
Welcome back. Well, it's time to talk stocks and, take a look at the CNBC TV18 list of top stocks to watch. Now, we have our team standing by. Guys, good morning to all of you. Let's kick it off with the Marico. And like we were saying earlier, there's some good news coming in here for this one consumer company. Manglam, over to you.
Well, Marico reported a largely in-line set of numbers, which is good in the current context. The rural growth for the company has been 2 times higher than urban, and they see price growth coming by as well. Domestic volume growth at 5%, higher end of the expected range of 4 to 5% as well. And if you look at the revenues as well as the margins, absolutely in line with street expectations. Also, the company had given us a second quarter update, but the net profit was a big beat. The reason why that happened was because of, one, there was a higher other income component and lower finance costs. The key positive this time around, apart from the segmental growth in particularly Saffola, was Bangladesh. Despite the turmoil, the company saw Bangladesh business grow 8%, and on that itself, they said that this will trend higher with a double-digit momentum, which will continue. That's what they said on the domestic revenue as well, will trend higher with pricing and volume growth gradually picking up. The only fly in the ointment will be the margins, where there is inflation in both copra as well as palm oil. So will the company continue to maintain these margins, or there could be a dip, is something that we'll have to track. For starters, the stock in the green.
All right, stock in the green. We'll take that. Thanks for that, Mangalam. Well, let's hop across to Upasana. She's there to tell us about Voltas and Kaynes Technologies. Morning, Upasana.
Good morning, Nigel. First up, let me start with Voltas. The company reported largely inline set of numbers. Revenue and EBITDA margins were largely in line, but there was a slight miss on the PAT number. Now, revenue stood at 2,619 crore with an uptick of 14% on a one-year basis. This revenue growth was mainly led by strong growth from the company's UCP segment, which is 60% of the revenue mix. Now, company's EBITDA margin stood at 6.2% versus 3.1% on a one-year basis, and margins in EMPS segment recovered and turned positive, boosting the margins further. Now, PAT number stands at 133 crore with an uptick of nearly 2.7 times on a one-year basis. And mind you that the company's UCP products, that is mainly split AC and window AC, continues to hold market share at 21% as of H1 FY25. Now, next up, let me start with Kaynes. The company has reported in-line set of numbers with the street estimates. Revenue and PAT was in line, while margin was much above the street estimates. Revenue saw an uptick of 58% on a one-year basis. EBITDA margin stood at 14.4% with an uptick of almost 19 basis points on a one-year basis. And company's PAT saw a growth of 88% and stood at 60 crore. So all in all, I expect both these stocks to open in green today.
All right. Thank you very much for that, Upasana, with those results. Well, let's talk about Honeywell Auto and Hitachi Energy as well. MNC names. Vamakshi standing by with results here. Vamakshi, good morning.
Well, good morning, Prashant. Let me first start off with Hitachi Energy. A good set coming in from the company. It's a beat across the board, much better than what the analysts were expecting. Revenue saw an uptick of 25%, and this growth is largely being driven by a favorable mix as well as better execution from the company. Gross margin improved by 228 basis points, but the other expenses saw a very sharp surge. Resultantly, the EBITDA margin saw an uptick of only 53 basis points. Nevertheless, this is much better than what the street was expecting. Net profit on a low base more than doubled to 52 crores. Therefore, this is looking like a good set for Hitachi Energy. Ordering activity was too quite buoyant. Order inflow saw an uptick of almost 12%, and in fact, this is the highest ever order backlog of nearly 8,910 crores, and this in turn provides 26 months of visibility for the company. In the con call, the management said that they're maintaining the earlier guidance as far as margins are concerned. Earlier on, they had given a double-digit margin guidance, so they're holding on to that. Operational cash flow was negative in the first half of the year, and that the management attributes this to a timing issue, and they don't see any further challenges on this front. So overall, good set coming in from Hitachi, going with a green for this counter. Honeywell, on the other hand, did not post a good set of numbers. It was much below the street expectations. Revenue saw a decline of almost 10% on a YOY basis. This has come in nearly 14% below the street's expectations. Gross margins have contracted by 250 basis points. EBITDA margin have come in nearly 270 basis points lower, and the net profit is seeing a downtick of almost 6% YOY. Nomura, who has a buy rating as well as on Honeywell as well as a target price of 60,800, said that the margin disappointment was largely due to inferior mix led by sluggish export demands from non-Honeywell entities. Overall, they are expecting a margin recovery in the second half of this year.
Okay, all right, Vamakshi, we'll keep that in mind on Honeywell. Let's see how the stock reacts. We now have Yash joining in to detail how Star Health performed in the quarter gone by. Yash.
Well, Surabhi, I'm going with red when it comes to Star Health Insurance. No doubt that the top line growth was pretty strong. The gross written premium grew at 17% in the second quarter, ahead of brokerage estimates. The net earned premium grew at 16% in the quarter, that too ahead of brokerage estimates. But the operational performance for the company, that was the pain point. That was very, very weak, both on a year-on-year basis, and it was sharply below what the street was working with. Underwriting loss, that widened about 1.5 times. It was sharply higher than what the street was estimating in terms of the loss amount. Also, combined ratio, that came in 379 basis points higher at 102.99 versus 99.2. Again, sharply higher than the numbers that the street was working with. And because of this weak operational performance, I'm going with red on Star Health.
All right. Yes, thank you very much for that. So we'll keep an eye out on the stock as it opens. Container Corporation is the next one. Vinny's got details here. Vinny, good morning.
Good morning. So yes, talking about Container Corp, not an exciting set of numbers that's coming from the company in Q2. The sluggishness that one has seen in the revenue growth of the company has even continued this time around. The growth is just at 4%. Also, the volumes, which is important, both the EXIM and domestic volume, that seems to be still lower, and it's much below the guidance that given of 8 to 10%. Management at 18 to 20% was the volume guidance. I beg your pardon, is what they'd given. So in FY24 also they had missed the guidance. Q1 also a guidance miss, and Q2 continues to be a guidance miss. So we're expecting the stock to open up in the red because the weak performance in the EXIM volume specifically is still continuing for the company, and commentary will be key on that front, that how do they see that moving. So keep an eye on that one.
Got it. Thanks, Vinny, for that. Well, let's have a drink. Mangalam's back with us to tell us about Allied Blenders. Mangalam, how are those numbers?
For Allied Blenders, it is a strong operational performance. The revenue has been a little soft, just a 2% overall growth at around 868 crores. Margins have actually expanded a fair amount from 8.5% to closer to 12%, and that's because of a 45% jump in the EBITDA. Why is that? Because one, premium products are doing well. Secondly, the company's sourcing their ENA captively. And the third part is their capacity utilization itself has increased from closer to 65% to about 75% as well. The net profit saw a further boost because of the IPO funds. The company went ahead and retired some of its high-cost debt. So finance cost has come down from 43 crores to 25 crores. And there has been a near 3x jump in the net profit from 11 crores to 47 crores itself. The company has said volumes overall were flattish, but Prestige and above saw a volume growth of 8.7%. Very important to see where the volumes grow towards the end of this year as well. See green on Allied Blenders.
All right, Mangalam got that. Thanks very much for it. So we'll watch out for Allied Blenders. Let's look at Torrent Pharma. Vivek is joining in. Vivek, so how are the numbers?
Well, Torrent Pharma, today is in news on the back of a large block deal that's actually anticipated from the promoter group. So the promoter entity, Torrent Investment Private Limited, is looking to sell up to 2.9% of the total equity via a block deal today. As per the term sheet, the base size of this particular block is 2.4% and another upsize option of another 0.5%. The deal size, when you're talking about the base size, it's at 2,500, and if the company chooses to go ahead and exercise the green shoe option or the upsize option, the total size of the block could be as high as 3,000 crore rupees. A lockup of 120 days on further sale of shares. Offer floor price is at almost 6% discount to yesterday's closing at 3,022 rupees a share. Remember, at the end of Q2, Torrent Investments, that is the promoter entity, held over 71% stake in the company, so that will drop down post today's block deal.
Okay, all right. Vivek, thank you very much for that. SBI Card is the next one we want to focus on. Abhishek has got details here. Abhishek, good morning.
Good morning, Prashant. So SBI Card reported the numbers yesterday in market hours, but the PPT came in at fag end of the closing time. So the yield is at all-time low of 16.4%. Net interest margin is at all-time low of 10.6%. The revolver rate, now that's declined to 23% versus 24% in the previous quarter. This is the main number to look for in terms of earnings momentum for SBI Card, and it continues to decline. Their annualized credit cost is like Maruti ad, never gets over with respect to, being on the higher side. So annualized credit cost is at 9% versus 6.7% YOY and about 8.5% quarter on quarter. So for 23 quarters in a row, their annualized credit cost on a quarterly basis has been north of 4.5%. HSBC has written on SBI Card, they have a reduced rating, cut the target price to rupees 580 per share. They say that there is no clear view or guidance on recovery in asset quality. The timing of earnings recovery is difficult. So they have cut FY25 EPS estimate by 25% on higher credit costs. Motilal has also written on SBI Card's neutral rating. Target price has been cut to 750 from 850, and they have cut their next 2 years, earning estimate by 22% and 19% respectively. Back to you.
Okay, all right. Got that, Abhishek. Thanks very much. Well, here's a quick recap of our top stocks to watch. The ones that have positive news flow are Marico, Voltas, Keynes Tech, Hitachi Energy, and Allied Blenders. The ones that have negative news flow are Honeywell Automation, Star Health Insurance, Concor, SBI Card, and Torrent Pharma. Okay, let's move on. Oil marketing companies have raised dealer commissions and will undertake intrastate freight rationalization as well to benefit consumers in remote regions. Oil Minister Hardeep Singh Puri welcomed the move via a post on social media portal X, saying that the move will benefit consumers in remote regions as fuel prices will reduce in several parts of the country. The decision will be implemented later in poll-bound states and constituencies. So this is a pretty interesting and very important development coming through. Sources are also telling CNBC-TV18 that OMCs have been instructed to keep fuel price variations within states to just about 2 rupees a litre. Sapna is on the phone line with more details on this exclusive. Sapna, thanks for joining in. By the way, season's greetings to you. This is really important because it's not really a direct fuel price cut as such, but it's a smart tweak in policy, I guess, that will ultimately it'll lower the price of fuel at the pump, won't it?
Absolutely, Suji, and a happy Diwali to all of us here. Very quickly, yes, you're right that instructions have gone out to OMCs to keep the intrastate price variation within 2 rupees a litre, be it petrol or diesel. So as of now, we're given to understand that in a lot of remote, far-flung areas within a state, the price variation is as high as up to 6 rupees a litre. It can vary between 4 to 6 rupees a litre. Suppose I'm buying from somewhere, say it's 97 rupees something a litre petrol, and somebody in a very remote area, that person may be paying somewhere around, maybe even 4 to 6 bucks higher, depending on where the person is located, right? So, to check this, basically to remove this kind of a price anomaly within the states, these kind of instructions have gone out to OMCs and they are doing the needful. So that's one. Second, we are also given to understand, however, with the prices going down sharply in these far-flung areas, there will be an element of cross-subsidization as far as the pricing of petrol and diesel is concerned. Say, for instance, people who are in densely populated areas or where the petrol pumps are very much within easy access, say, for example, Delhi or Noida or Ghaziabad for that matter, or Bombay, there the per litre petrol diesel may actually cost around 6 to 7 paisa higher. So this kind of a cross-subsidization where the sales are much higher is likely to help the OMCs make up for the price cuts, the sharp price cuts that are going to happen in the far-flung regions. So it's a two-pronged move. One, keep the variation within $2 within a state. Consequently, prices come down. However, then there's a cross-subsidization element, 6 to 7 paisa per litre, where the OMCs will be to an extent able to make up what they are giving away in other places.
Very important story, Sapna. Thank you very much to put that into context for all our viewers. Appreciate it. We'll keep coming back to you for more. We'll take a break. We're back with the management of Maruti Suzuki as we talk about their second quarter numbers and, more importantly, outlook. Stay with us.
Welcome back. Well, let's focus on the stock of yesterday, which was Maruti. The company missed estimates in the second quarter. Profitability came down by close to around 17%. Margins came in at 5-quarter lows. The management has warned of weak demand after the festive season. To discuss the past quarter's performance and also what are the trends going ahead from here on, we're joined by Mr. R.C. Bhargava, the chairman of Maruti Suzuki India. Hi, Mr. Bhargava. Good morning. Thanks a lot for joining in. Well, their quarter two earnings reflect pressure on the overall sales. Could you tell us where is the pressure mainly coming from? And if you could give us some insight on the past quarter's numbers.
Overall, we found that we had a sales compared to last year, a sales growth, a wholesale. Wholesale growth was a little bit lower than last year, although the export sales were 11 or 12% higher than last year. That is why the domestic sales were lower. Part of the reason for the domestic sales being lower was that we have been consciously trying to adjust our production to reduce the inventories which had been there in the market for some time. And since we have shifted our entire focus now on using retail sales as the relevant numbers for anything, we felt that these wholesale numbers in any case didn't have much meaning for us. And we should reduce this and align all our actions towards maximizing retail sales. The financial results are all right. We are better than last year. This year we have one-off provision which we've had to make because the budget took away the indexation on the interest earned on long-term debt funds. And that provision had to be made and the tax changes. And that has set us back by some 800 odd crores. Otherwise, our PAT should also have been better than last year.
Mr. Bhargava, how do you see the festive demand panning out? You mentioned yesterday that retail sales should be about 3 lakh cars during the festive period. Could you give us the exact timeline about what you're talking about for this number, 3 lakh number?
3 lakhs is, they picked a date from September till the end of October. There's a date, I think, around 22nd or something of September till the end of October.
Sir, good morning and season's greetings to you. Now, you've mentioned about 14% growth. Is that for the same period as you've mentioned these 3 lakh units?
That is for the exact period of end of the Shraddh period till the end of Diwali. That 14%, which will be about 2 lakh units, is for that period. If you compare the festival period last year to this year, it's actually a 14% growth in retail sales.
All right, Mr. Bhargava, you have indicated that inventory levels will come down, I think, to around 30 days by the end of this month. Now, there have been some conflicting reports which indicate the industry is seeing inventory levels of around 70 to 80 days. So if we believe those reports, do you mean you're expecting a sharp improvement and these inventory days will come down by nearly half?
No, 80 days is what FADA has been saying for the industry as a whole. But for Maruti as such, our figure, it was 40 odd days earlier. But with the sales which have taken place, because as you've seen, our retail in this period of the festival period is much higher than the wholesale. So inventories have reduced, and as a result, we'll be around 30 days at the end of October.
Right. Yesterday during the press conference, Mr. Bhargav, you indicated that continued concern for entry-level segment, right? Are you expecting any improvement here? Also, if you could talk about SUV contribution to overall growth from here out.
The market for SUVs continues to be very good. And the bulk of the growth which is happening is actually in the SUV segment. The entry-level car market size, and as I mentioned in the press conference, sales of cars below 10 lakhs are now lower than what they were 6 years ago in 18-19. Whereas the SUV segment has grown from a much smaller base. Today, it's some 54 or 55% of the total market. And we have made our presence felt there. We are now 27% of the SUV market.
Right, got that, sir. So, just to take that point forward, considering the continued fall in demand for entry-level cars, is Maruti looking to, make any tweaks, perhaps cut down production over there, any other changes?
We're not cutting down, but we are at the moment adjusting, reducing production so that we are not building up inventory beyond what is required for normal sales. So, because we have had this problem in the past that we have built inventories of some of the small cars. I think it was largely because there was not enough coordination between the sales and the production. But now we are very aware of this problem. and we're cutting down production. But if the market revives, we'll be ready to increase production also.
All right, so after the Q1 earnings, you had talked about single-digit volume growth for this fiscal. Do you still maintain that?
Yes, actually for 24-25, we think we will be in line with what the industry has been saying, which is a growth, overall growth of 3 to 4%. And I think this growth is only because the segment which is growing is the segment above 10 lakhs. The whole market, and there's a large market in India below 10 lakhs. That market is not growing. So, you know, let me give you a figure. In 18-19, 82% of the cars that were sold were below 10 lakhs. Now that segment is not growing anymore, it is declining actually. So you can judge for yourself, if that large segment does not grow and actually declines, how much can the other segment grow and make up for this 80% segment?
Mr. Bhargav, you are a market leader and you were saying that large market of cars below the 10 lakh rupee ticket size is not growing. Actually, it's on a decline. You said, well, sales are below where they were 6 years ago. Won't it be tough to meet the target that you just laid out?
No, we didn't put a high target for this year because we have recognized that the market conditions are such that unless this segment below 10 lakhs shows traction and starts growing at a reasonable rate, the overall market cannot grow much faster.
Okay, got that point. So when can we expect a revival in demand? That's the real question, sir, the big one, right? I mean, as per you, what would be those, a couple of reasons that need to change, that need to turn? What is the issue here? That industry-wide, I think, the growth numbers are stuck at 4 to 5%.
Problem is that certainly the income of people is growing because the economy is doing very well. We are having a GDP growth of 7%. Last year was higher than 7%. It's a good growth rate. But simultaneously, what is happening is the cost of cars is also going up because the regulations, especially regulations relating to safety, are being made more and more stringent, and we have to comply with those regulations. And they cost money. So the effect of higher incomes arising from economic growth is in a sense getting neutralized by the higher cost of the car because of the cars conforming to higher standards of safety and of course emission. Emission has to be done. It should be done also. So looking at that, it's hard to predict that there would be a sudden and quick bounce back in the car demand.
Well, thanks a lot, sir, for joining in and giving us all those details with regard to the past quarter and how do you see the trends shape up from here on. Well, let's get in Deven Choksi, MD at DR Choksi Finserv, who joins us on the show. Hi, Deven. Good morning and happy festivities. Wishing you and your family the best. Well, what about Maruti? You heard what the management had to say. Yesterday, first look at it, it appeared the profit number was a big miss. But the street has factored in, a couple of one-offs in those numbers as well. And ultimately, the operational performance, they believe, wasn't that bad. How do you approach the stock? It was down 6.5% yesterday and ended down close to around 3%.
Yeah. Good morning, Nigel, and wish you happy Diwali and all festivities as well. Well, I believe that I think the Maruti is prudently putting across the commentary. They are very categorically putting across that below 10 lakhs vehicles is not something which is going to give the volume anymore now. So it would be futile to compare the volume numbers of the portfolio that they are holding. Rather, I think the company has moved significantly into the premiumization. And that's where the bigger cars, the higher value cars, would constitute larger amount of revenue pie as we see it going forward as well. And that numbers are not going to be as many as I think one would have seen, I think, in the below 10 lakh kind of vehicles. So that part of the clarity is very well getting established. Now, having said that, I think the near-term problem is not going away. The industry is saddled with a significantly large amount of inventory at this point of time. And each and every OEM will be undergoing the process of rationalizing or cutting down the production at this point of time, till the time the industry clears the entire inventory, which is there in the overall yards of various companies. So from that perspective, I think we don't see very exciting numbers coming out in the third and the fourth quarter. Maybe the companies will be in a position to manage, I think, the numbers with a higher amount of cost pressure getting seen into the numbers. So as far as I think the auto play is concerned, in these 2 quarters, quite possible that investors would get some of these companies at a lower valuation, lower price. And that would be the time to buy from the long-term perspective.
Right, that's the concern on Maruti playing out. Devin, hi, good morning, and wish you a very, very happy Diwali to you, your teams, and of course, all at home. So that's Maruti. Let's talk about the other sort of concern that's come out this season, which is this whole asset quality issue. And it's showing up obviously in stocks like SBI Card for a while. It's not new, right? There's a reason why the stock price has moved down as it has. But what would you sort of be looking at? Would you continue to stay away from some of these unsecured lending plays, or would you want to bottom fish?
Hi, Surbi. Good morning and happy Diwali to you all as well. Well, I believe that I think the verdict is very clear. The unsecured loan portfolio of the NBFCs as well as the banks, including the credit card companies, is going to have the pain of its sort in this coming period. Largely because of the fact that I think the urban consumer is spending more, and I think probably having the challenge in order to have the surplus in the wallet hereafter. And that's where probably I think the regular provisioning for the unsecured loan, the default is also there in the system. Slightly remaining cautious at this point of time. Our focus is largely on the quality franchises, the companies where probably the vertical wise they are lending in a systematic manner. Likes of Bajaj Finance, I think we find them really more prudent in lending their book to the retail customers. Most of the other companies, particularly, I think, are trying to get the market share in terms of compromises, I think, on the risk factors. And that is where I think one requires to be a little bit watchful about. At this point of time, our approach would be to stay with the larger companies where they have better ability to manage the risk, and also to stay with companies where probably the benefit of the financialization of assets, I think, is happening. Intermediaries like stock exchanges, depositories, and even to a certain extent, the AMC companies would be the right choice to keep your money in at this point of time.
Okay, got that. No, by the way, I just want to highlight that insurance companies were big movers yesterday. I mean, quiet movers, but look at names like SBI Life, and the stocks will come up on your screen. Look at something like an HDFC Life. So after ICICI and SBI, the banks, it was insurance, life insurers, which were 3.5% movers each, both of them. So that is something else to kind of look at as well. The other thing, of course, has been, as I think we were discussing, autos, right? And Maruti was a case in point. In 2 days, we'll get the auto sales numbers, the monthly auto sales numbers. And I think, that'll be, in a way, kind of the first look that we will get about how the festive season, at least part of the festive season, has really panned out. And that could be market moving, more market moving than usual for some of these individual stocks. Take a look at names like Hero, etc., and how much they've sold off recently. Devan, good morning. Thanks for joining us. Just a word on a few other names that we saw moves on. JSW Infra, since the IPO, has not really done very much. Yesterday was a 10% mover. The other is JSW Energy. So it was a good day for JSW, the group. 2 stocks, both 9-10% higher. Any thoughts?
Yeah, Prashant, good morning. Well, I think in general, we probably find the companies with the infra focus are relatively better, be it in the power distribution segment, or be it in the port-related activities. I believe that I think even including companies like Adani Port, we came up with a result. We believe that I think the larger number of volume is something which they are basically experiencing on their books. And that's where probably I think we like some of these companies from investment perspective. The power in the power distribution companies, obviously, I think even steady performer at this point of time. But I think everything is priced in. That is what my concern is. That today, if as an investor you want to buy something afresh, probably you have to wait for a time till the time the time correction or the price correction takes place in some of these counters. Otherwise, I think everything seems to be pricing as far as this story is concerned. We like this story from investment perspective, but would like to have the margin of safety at a lower level. One would probably add into the portfolio.
Oh, okay, all right, Deven. Thanks a lot for giving us that input on all those stocks. Wishing you a good day ahead. Looking cracking as always, and we'll catch up with you soon, Deven.
Thank you.
Well, for the time being, we slip into a short break. You come back, we'll tell you how to approach the markets. Our technical experts are waiting for you on the other side, Mitesh as well as Sudarshan.
Okay, welcome back. With us here on Bazaar Morning Call. Just starting the pre-open in about 7 minutes or so. Mitesh Thakkar and Sudarshan Sukhani are with us with what they'd want you to do as we start another session. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. How are things looking? Rebound continues. For the bank Nifty, it was a 2% day, closed above the 20-day. The PSU Bank Index, 8% in 2 sessions flat.
So, Prashant, I was actually calling for some kind of a pullback. The basic idea was that the markets were very oversold, and also it's the fact that, if you draw a trend line on the Nifty, joining the low of 26th October, 27th October, that time, and the bottom was formed around 18,800, 850 levels. And connect that with the election day low, closing low, which is around 21,800. The resulting line is at about 24,150, 100 levels. So, I've been calling for 24,150 to hold out. And last 3 days, if you see, on Friday, the low was 24,073. There it was 24,134, and yesterday was 24,140. So I think those levels are holding on, but still looks like broadly a pullback to me. Given the fact that we have fallen from beyond 26,000 levels, 26,250, I think, we've fallen by about 2,000 points. It can still be a 1,000-point pullback, which is only a 50% retracement. But I believe that around 24,700, 750, which is where the earlier lows, lots of lows were made, I think that's where supply will come in again. So I'm only planning for that pullback to about 24,750 odd levels. Of course, in between, if the trend line breaks first, then I think, we again turn negative. But for the timing, it looks like that this market will, with some volatility, give a pullback to about at least 24,750.
Okay, 280, 290 points more. Thanks a lot for that, Mitesh. Well, Sudarshan, coming across to you. What's your take? We have had a good bounce back in the last couple of sessions. Are we good for more?
Yeah, good morning. Yes, after a long time, or rather after many days, we had 2 days when support held, and that's good news. We were buyers on Monday, and yesterday we were buyers in the Bank Nifty. Both days have gone very well. It does appear that the market is now trying to find some kind of a support. Now, whether that holds or not, lies in the future. It's very difficult for me to say now that, okay, this support will hold or it will not hold. That's not easy to say. What is much easier is that so far support is holding. If support is holding, then we should be buyers in this market. And my trade for the day is avoid the Bank Nifty simply because we had a wide range day yesterday. So today could be choppy, but focus on the Nifty today. Look for small intraday dips to go long. And if there is a small dip after you buy, don't worry about it. Keep a 150 point stop loss, make it a swing trade, and be long in the Nifty.
Got it. Okay, all right. Sudarshan, you go first. Tell us what about the individual stocks you're looking at?
Well, REC is a buying opportunity, stop under 520. JK Cement, which comes very rarely in my list, is giving an interesting pattern, which is a buy. So buy JK Cement with a stop under 42.50. My only intraday short is Hindalco. Remember, it's intraday. It's not a commentary on the stock as such. For the time being, it may show some signs of weakness. Consider going short in intraday trades only with a stop above 700. That was Hindalco. And finally, PEL is my third buying opportunity, stop under 270. Once the market starts giving a message, okay, I'm willing to go higher, I'm willing to hold support levels, the focus should be on the buys, not on the sells.
Got it. Okay, all right. Thanks a lot for that, Sudarshan. Mitesh, what about you?
Morning, Ajal. I have also more buy calls. A buy on Bank of Baroda. I think this stock is showing very strong pattern and suggestion that the bottom may have been made. And I would recommend buying here with a stop at 249 for a target of 265 to begin with. A buy on Balrampur Chini, which appears to have completed a pullback. So keep a stop at 627, look for targets of 675. And a buy on HAL with a stop below 42.20 for targets of around 4,400. And one sell call, that's on Cipla, which I would recommend selling with a stop at 1496 for targets of 1430.
All right. Mitesh and Sudarshan, thank you very much, both of you, for being here with us. We'll take a quick commercial break here. We come back with a pre-open, which is 2 minutes out. We'll have the management of V-Mart Retail to talk about their second quarter numbers and outlook going forward. Stay tuned.
Welcome back. Well, let's talk about oil marketing companies. They have raised dealer commissions and will undertake intrastate freight rationalization to benefit consumers in remote regions. That's what our colleague Sapna just apprised us on. We have with us Mr. M.K. Surana, the former CMD of HPCL, who joins us on the show. Good morning, Mr. Surana, and thanks a lot for joining in. Well, could you tell us what does this revision in dealer commission mean for OMCs? There has been an increase. How would that affect prices at the pump? How much lower would it be?
So the dealer commission is decided periodically by negotiations between the dealers' bodies and the oil companies. I think the last revision had happened in 2017, and it is basically related to various the wages which they have to pay to their staff and the returns on the investment they are making and the business expenses, etc. And the last revision, there were also some marketing disciplinary guidelines were enforced through this, which were been a matter of litigations periodically in between. And it has gone to some time is for challenge, etc., etc. So now it was anyway due, and I think that is what these people have done.
Mr. Surana,
the second part, yeah. Yes.
Sorry. Good morning, Prashant here. Could you just explain how does this work? So companies pay more to dealers, and then because it's also said that price at the pump for consumers will come down. How does that flow through happen?
No. So normally what happens is there is a refinery. The whole pricing mechanism, how it works. There is a pricing at the refinery gate, what we call is RTP. Then that RTP is for every refinery locations and some major port locations. From there, within that zone, there is a equalized freight which gets decided, and that becomes the pump pricing for that location, the terminal pricing. And from there, whatever the freight to the petrol pump, etc., that is charged. And over and above that, there is a particular commission which is given to the dealer for payment. That is how you see the prices within an area the same, but if you go to different areas, it will be different. Now, the second element which is coming into picture is the freight rationalization, which was being done for a zone. That would mean that the remote locations would have the higher freight element, and therefore the pricing will be different in different zones. Within a zone, it will be same, but in different zones, it will be different. So what I understand is that this rationalization, which is within the zone, still there is some rationalization done, but it will be done on a larger area so that the inequality of the prices between different areas will be reduced. Now, overall, as far as oil marketing companies are concerned, on a rationalization, it will even out. Means some places which are where it was low, it will become slightly higher, and other places it was high, it will become lower. Except that, so overall, our marketing companies, it will get nullified. But some impact may still be there company to company because this equalization will happen on broad basis, but your volumes may be different. Different companies may have different volumes in different zones. And to that extent, on overall company level, there may be some impact either way. But
So,
otherwise, it will get equalized.
Okay. So OMCs may take a very small hit, possible.
Yeah. So what will happen is, as I mentioned to you earlier, based on the refinery and the major port location, the base price was decided. Then based on the equalized freight, a terminal price was getting decided. And from depot price, and then from there to the petrol pump, there was an actual freight. Now that zone which was being considered, it may be a broader one, so that the different zones freight in equalization will get reduced. So overall, OMCs may have lesser hit than a nominal hit, very marginal hit it should happen.
All right.
Except to the volume differences between different companies in different zones. To that extent, that impact may be there, but that is a business.
All right. We'll leave it there, Mr. Surana. Thank you very much for joining us bright and early, and festive greetings to you as we speak to you after a while. Thank you very much for being here with us. Well, let's talk about the company which reported numbers. V-Mart Retail is what we're talking about. Revenue and EBITDA growth came in healthy. Profits took a hit. Depreciation and finance costs were the reason. The company's opened 21 new stores as well, taking the total store count to 467. Anand Agarwal is CFO of the company. He's joining us now. Anand, good morning. Good to have you here. Festive greetings to you and your team at V-Mart as you execute. I mean, I think a simple question for a Q2. What was same-store sales growth? Q3 so far. What are the numbers looking like? Because this is the festive period, and markets are very keen to know how is this panning out. Lots of debate about whether this is weaker than usual. Are we entering a bit of a slowdown? So let's hear it from you.
Good morning, Prashant. And yes, Q3 has begun on a strong note. I can't say that it is not strong, but definitely it is not as good as we had expected. There's been slight slowdown in terms of the winter. There is a slight delay in the winter season, and also the monsoon got a bit extended. We had a bit of a climatic turmoil in terms of the cyclone in the east parts of India. So far, while the growth has definitely been there, but slightly less than what we had planned for.
Mr. Agarwal, can you expand on that, please? How much had you planned? What is the gap? And what are you really seeing on ground? And also throw in some color on tier 2 cities, tier 3, urban versus semi-urban / rural. Some more color, because everyone's trying to understand exactly what is the consumer feeling. Overall, your same-store sales growth, I think, for the first half is around 13 to 14%, right?
Yeah, that's correct. That's correct. No, definitely, I think we are still targeting high single-digit same-store sales growth. We are still looking at good growth. We are still looking at better footfalls than last year. In fact, the footfalls in the first half of the year have almost been up 50%. So that's a very strong surge. There's a lot of work that we had also done internally. There's a lot of changes that we have brought in internally, which are yielding results. There's a lot of new stores that we have opened in the first half, and they have become on a very, very strong note. So despite the climatic disruptions, I would still say, I think we are still seeing a decent amount of growth on the ground. There is definitely much better consumer sentiment. There is much better buying which is happening. There is better footfalls that we are able to witness, especially in the tier 2, tier 3 towns. That part of the country definitely had been severely under stress for the last 3-4 years. So we are seeing some, relief coming in that geography, and that is very helpful. That is, acting as a tailwind. But yes, there's still slight bit of concerns around, how the winter season is going to pan out. And especially in North India, winters account for a very large part of the apparel market. So that's a bit of a concern, but I think it's a matter of time. So we should be hopeful and optimistic that we should, get there very soon.
Okay, all right. Hi, Mr. Agarwal. Good morning and good to see you in. I was briefly in UP and I saw quite a few of your stores out there. So good going on you. Well, let's talk about a couple of numbers then. You've told us that on a like-to-like basis, high single-digit growth is what you're looking at. So we get that out of the way. Earlier, you had hinted that the revenue growth will be in mid-teens, around 15%. Do you believe that is possible? Point number one. And point number two, what about margin? What's the outlook? Because the core V-Mart margins this time around, just for the past quarter, were actually a little bit lower than Unlimited. So blended, what should we look at?
Definitely, as far as growth is concerned, we should be looking at definitely, high teen growth for the full year. Quarter three is our biggest quarter. Historically, it's always been like that. And a large part of sales and also a very large part of profitability gets accounted in quarter three. So quarter three is the big quarter to watch, and we are all, working very hard towards that to make it happen. First half usually is a small number in terms of profitability. We've grown from last year. We've improved from the last many years, and that's very visible. There's been a lot of work that we've been trying to do at the Unlimited front, which is, in South India, and the margins, therefore, are reflecting of the good work that has happened. The work has not finished. I think there's a lot of still, ground to gain. And from a post-Ind AS perspective, while the profitability for South may remain slightly higher than, the core V-Mart numbers, but that's because of higher rent, which gets accounted under Ind AS 116 and thereby gets nullified from the EBITDA numbers. But otherwise, on a pre-EBITDA, pre-Ind AS basis, the profitability is slightly lower than core V-Mart as far as South India is concerned under Unlimited. But in the next 1 year or so, one or 2 years maximum, we should be able to bring both Unlimited and core V-Mart profitability at par. And that is what we've been working towards. And all the new stores that we've been opening in South India under Unlimited, in fact, have been delivering higher profitability even than some of the core V-Mart stores. So that's very heartening.
So you're saying high teens growth. That's on the revenue front, right? You're confident of clocking that. Okay, fair enough. Just give us the store rollout plans as well going forward. How much capex will you do, and what really the numbers will look like? And also, second part of my question is on pricing. When you're talking about this high teens growth, is it going to be more a function of more stores and more volumes, or is there any uptrend in pricing at all? Average pricing, or is it actually stable, or is it declining? Just again to kind of get a sense of the real consumer sentiment.
So a large part of our growth always is volume-led. We've always relied on volumes to grow our business, not really looking at price growth. In fact, we've been reducing prices for the last 2 years. And in fact, in the current year, I think we are almost done with the price correction. So there is no price correction or price increase on the anvil. Whatever changes that might happen on the average selling prices, that may happen because of the mix change, if at all. But otherwise, the strategy is always to grow through volumes. In addition, we will also be opening around 55 to 60 new stores this year. So that's a slight increase from what we stated last quarter. So marginal increase, but definitely, yes, it looks possible. We should be looking at around 55 to 60 new stores for the full year. There might be 2 or 3 store closures, but that's it. That is a usual norm. So nothing, unusual around that. I think the same store sales growth, as I mentioned earlier, should be, high single digit. So yes. 10 to 12% area addition and, mid to high single digit same store sales growth should be able to give us 16, 17% around overall revenue growth.
Okay, all right. And LimeRoad turns positive, a bit positive in the final quarter of this year, on track?
No, I can't say that it is, absolutely going to be a bit positive, but yes, indications are there, reducing our losses quarter on quarter for the last 5-6 quarters consequently. This quarter also, the losses have decreased by almost 60% year on year. So that's a very good sign. So all work is happening towards making it, less cash burning, but let's see where we will reach.
Appreciate you joining in, Mr. Agarwal. Wishing you, your entire team, and all the best in these festivities, and wishing you a happy Diwali in advance as well.
Thank you.
Well, it's 9:10, so let's get Mitesh back in to give us his 9:10 call. Mitesh?
Yeah. I'll go with a buy on Bank of Baroda for targets of 260.
Got it. All right. Sudarshan, what about you?
Look for a buy in BEL with a stop under 270.
BEL was a big mover yesterday and starting absolutely flat. Gentlemen, thank you very much. Speak to you soon again. I just want to quickly put out a few names, few stocks in the pre-open as they've settled, and then I'll go across to Abhishek for SBI cards. If you can look at Marico, let's just quickly put these up in the pre-open and how they're starting. These are all earnings reactions. Marico, Voltas. Marico is up 6.5%. That's the big mover, looks like. Voltas should come up next. Keynes, Voltas is flat. Keynes is the other one. Star Health, numbers are a little poor. So we should look at that as well. And then, Container Corporation is another one which should come up on your screen. Keynes is up about 6% or so. And of course, the entire oil marketing pack. Star Health is starting 3.5 lower. SBI cards is also something we want to look at. Abhishek is here to revisit the numbers. Abhishek.
Well, the yield for SBI card is at all-time low of about 16.4%. The net interest margin also at all-time low of 10.6%. The revolver rate, which actually helps you in earning, that has been declining from 45% a few years ago to right now about 23%. And their annualized credit costs remain elevated. It's like Maruti ad never gets over with, remaining on the higher side. So it's coming at 9%, which is the highest in last few quarters. HSBC has returned on SBI cards reduced rating with a target price of 580 per share. They have cut the EPS estimate by 25%, and there is no clarity with respect to recovery in SBI card for their earnings momentum. MOSL, that is Motilal Oswal, has also written on SBI card. They have a neutral rating, cut the target price by 100 rupees to 750 per share. They have cut the EPS estimate by 22% for FY25 and about 19% for FY26. Back to you.
Okay, all right, Abhishek, thank you very much for that. So that's SBI cards, a few seconds to go, and then we'll have the market open. Something doesn't square. 90 lower on the Nifty and 130 on the sensex. Think actual start now on your screen. What do we have? It's down 0.25% on the Bank Nifty. The Nifty is down around that much, 0.25% or so. 24,400 in the Nifty and 52,200 in the Nifty Bank. Look at the sensex, which is starting down about 0.25%. Mid-cap index is absolutely flattish, is it? Advanced decline, 800 up and about 500 lower, so not very much difference there. So 90 points now lower, so about 0.33%, 0.4% or so on the Nifty. I think you got about 40 stocks on the Nifty heat map which are starting lower and about 10 which are starting in the green. Let's get down straight to individual names. Result reactions, of course, top of mind. Survey.
Okay, well, 80 odd points lower, 87 points lower right now. Cipla is really taking it on the chin, about 4% lower on that stock. Dr. Reddy's is also starting weak, as is Sun Pharma. So some of the pharma names are really cooling off. Then you have Reliance, which is putting in a lot of pressure on the downside. The Nifty, by the way, is now down a whole 100 points. Aside of Reliance, let's see what else is losing ground. There's Tata Steel, there's Hindalco from the metals pack. There's also ONGC, some of these commodity names not really holding on too well. There's more selling on M&M, down about 2% as well. Bajaj Finance, SBI Life, these are some of the the BFSI names which have started lower. On the flip side, Maruti, maybe it's a little bit of a pullback after yesterday's drubbing. There's a little bit of buying on Tata Motors, and there's ITC, and then it really fizzles out. There's absolutely no leadership for the Nifty, at least at this point in time. Some of the IT names are trying to fight back, but let's see if they can do that in a more meaningful way, because right now, Tech Mahindra, Wipro, they're all at the flat line. HDFC Bank is at the flat line. So I think we have a lot of heavyweights which are yet to make up their real mind. But as of now, yeah, the bears have it as we open out for trade.
Well, I think we've got a couple of earnings reactions. We should take note of that. Deepak Fertilizers, I think the numbers came in late yesterday in the second half of trade. The stock had ended higher. It's building onto those gains. So big up move is what we're seeing out there. Keynes Technology as well. Good up move is what we're seeing out there. Those numbers look pretty good. The street liked it as well. So that stock as well is up close to around 5%. TD Power has been going from strength to strength. Well, that stock as well is up in the initial trade. I think it was up close to around 5%. Management has been sounding optimistic about business and saying that utilization levels have ramped up dramatically. So TD Power is another stock that's up 3%. Force Motors, lower volumes, but that as well has opened up with a sharp gain. Last time I checked, it was up close to around 7 to around 8%. So Force Motors comes up for you on the screen. Now 16% up, big move. That one is flying away. So keep an eye out on that one. On the flip side, Honeywell not reacting too well to its numbers. So that stock is down, I think, close to around 3%. Pullback is what we're seeing out there. Voltas as well, it started off in the green with a gain of around 2%. Quickly got sold into. The stock is down close to around 3%. 5-star, the numbers were very, very good. But I was reading a couple of brokerage notes, and now they're taking into account that earlier they were talking about growth of around 35%. Then they scaled it back to around 30%. And now they're talking about a 25% growth for FY25. Not just that, they have taken a decision to lower their yields by around 200 basis points starting November. So that's why 5-star should come up for you on the screen. The performance looked very, very good, but now they're scaling back their growth guidance. They're also scaled back in terms of their yields, which in turn could have some impact on the NIMs, but that will come with a lagged effect. So that's why that stock is down, closer around 4%.
All right, Nigel, let's a few other stocks, right, on your screen. Zomato is down about 1.6%. It's the second biggest volume-led gainer. I only mentioned that it's not a big price damage or anything, but the Swiggy IPO is around the corner, and I think there will be you will hear a lot of comparisons between Swiggy and Zomato, and the valuation difference, etc., etc. So that's a very, very well-known name. So 3 million shares now already on it. The biggest volume-led cut is coming through in Torrent Pharma, which is down about 3% or so, and I think others we've largely all covered. Shriram Finance went up, I think, about 4% yesterday. It's giving back about half of it. It's down 2% for now. Hudco, we will hear from the management in a bit. It's down about 1.25% or so. Look at Dr. Reddy's. Dr. Reddy's is starting about 3% lower. So that's a sharp cut. I think in 2 or 3 days flat, it's come down from, I think, about 1350 odd levels to where it is right now. Sun Pharma is, of course, also down about 2.25%. Look at Chennai Petro. Chennai Petro is starting about 2.5% lower. MGL is down another 2% or so, so no recoveries here. Policy Bazaar, 1.25% lower. There is Piramal Pharma down about 1.5%. So, yeah, I mean, a fair bit moving. I must say market breadth so far is positive. Poonawalla Finance, it's seen a big yo-yo lately. So the low 2 days back, actually a day before, the 28th was, let me just tell you what the low was 270. From 270 to 350, and this is the second day in that rebound. HCC is coming up. It's got completely smashed, 40 rupees, but up about 4% this morning. Capacite Infra, that's up about 4%. Yesterday was up 10%. So, again, sold off very sharply and then has come up. It's got some, big-sized HNI investors in it. Senco is up about 4%. Senco is another turnaround, because yesterday was down on the rumors that, I think it was IT rates or something. It was down at almost 10% at one point, recovered and closed lower, and that's coming up sharply this morning as well. Surabhi.
I'm looking at probably, the one that is the earnings pataka of the morning, and that has to be Force Motors. I mean, the stock's still up about 16-17%. Profits are up about 45%. Top line's improved by about 8%. So it seems that it's been really strong going. And the volumes are picking up on Force Motors as well. On the other side, I think the reaction to even numbers like Hitachi is very interesting, and it's kind of giving us a glimpse into the market's mind. Hitachi, there was nothing wrong with the numbers. In fact, there's margin expansion of 170 basis points for Hitachi. Top line's done well as well, so the execution is on track. But I think the argument is going to be on valuations. For a stock that's up 150% already this calendar year, is this good enough? And I think right now the market's not in a very charitable mood. So Hitachi is cooling off. And the other one, of course, Honeywell. I mean, there's a problem there with the numbers itself. So from the same kind of category, capital goods, some of these MNC plays. So Hitachi is kind of cooling off on good numbers, and Honeywell anyway has not been spared because the quarter wasn't that, it didn't play out that well for them. Absolutely.
Look at Voltamp as well. Voltamp has been sold off. I mean, the high, I think, was about nearly 15,000 rupees just 20-30 days back. It's down to about 10,700, but it's coming up with about a 3.5% pop. So that, again, transformer space and stock, of course, even with this correction, has done exceedingly well. So keep that in mind.
Just quickly, by the way, look at auto. I think the market's now trying to sort of buy into the pessimism and maybe hoping that, remember, a lot of the OEMs have told us this, that don't go by the first 15 days, wait for the entire season to get out. It's not as bad. And maybe the market's trying to buy into that narrative ahead of the event, because we'll have the numbers come the first. Yeah. And all the auto stocks, Tata Motors, Maruti, Bajaj Auto, Hero Motor, all of them seeing buy right now.
Absolutely. Dheeraj Agarwal is with us, Managing Director, Rampage Investment Managers. Dheeraj, good to have you with us here. Good morning. So, there are a lot of these events lined up, right? The US jobs, earnings, there's elections, FOMC. So let's paper over all of these. 10 days out, say 15 days out. Will the market be higher or lower?
I think from here, 15 days out is likely to be higher, because we have already taken a bit of a knock this month. So it's a difficult call at this point of time whether this correction is one of those 5-6% small pauses and the market resumes immediately after that, or do we see a more prolonged consolidation in the market? And largely because, not because of US elections or FOMC or US earnings, but simply because our earnings have been very soft this quarter. And as you rightly said, I heard you before I joined in that a lot of auto companies are saying just don't go by 15 days and 20 days numbers, wait for some time. The jury is still out whether the current softness is likely to persist for some more time, or was it sort of one-off and then things would resume. So, but given the fact that we've already collected 6.5% this month, the FIs have sold 1.1-1.2 lakh crores, about $14-15 billion. Quite likely that we bounce up a little from here rather than continue to fall in one straight line.
Neeraj, hi, good morning. Great to have you in. Happy Diwali and festive greetings to you, your team, and your family. The other interesting sort of debate, we were just discussing this, right, is what some of these very sort of well-bid MNC capital goods / power equipment makers, I mean, what they're delivering, because the markets had very high expectations, whether it's a Siemens or an ABB or a Hitachi right now. And today's reaction was quite interesting for me because the numbers seemed okay. Second quarter numbers, margins are up. I mean, revenues up, I think, 25% or so. But the question is there more left on the table to play for? What are your thoughts? Do you like this space to begin with in the first, in the first place? And if yes, and what about valuations and earnings?
I like the space, but I don't like the valuation. So you answered both my questions in the question itself. So one big change which has happened in this quarter's numbers and the stock price reactions to numbers is it's a very clear message by the market that we are moving away from narratives and focusing on numbers. Till last quarter, it didn't really matter that much, so long as you were in one of those fancied categories which was expected to keep growing for the next 4 or 5 years. A slight miss in the numbers did not matter so much. Markets were still sort of 1 or 2 days of 1-3% dip, and then the rally would resume. At this point of time, the market's sending a message that if the valuations are high, numbers will have to justify those valuations. Otherwise, the stock will come down, correct, consolidate, or whatever. So I just call it a shift from narratives to numbers, which will obviously make the markets a lot tougher going forward. It won't be as easy a walk as we have seen in the last 2 or 3 years.
Mm-hmm. All right. Hi, Dheeraj. Just taking a check on a couple of these names. Senco, yesterday there was some murmurs. The management came out there and clarified that there's no problem with regard to any kind of raid or anything on that front. The stock has recovered all of its losses yesterday. At one point of time, it was down close to around 12%. Dheeraj, the gold has been going from strength to strength. In fact, everyone's talking about the equity markets. Gold has given you 25% returns in the last 12 months or so, which is phenomenal. Yeah. How do you play that theme? Some of these financiers, gold financiers, it appeared that they were the way. But you have one in there. Manappuram has its own shares of problems, so that's not made you any money, though valuations are attractive. And the other way of playing it would be via Kalyan Jewellers, Senco, Titan. So your take.
I mean, why go for the secondaries? If you like gold, buy gold. It's a simple answer.
So you'll play gold by itself, either you rather not play by gold.
Yeah, you can do gold ETFs. You can remit money offshore and buy gold miners, or you can buy gold miners through the gold miners. So if you like gold, buy gold. That's a simple thing, because rising gold prices on jewelry demand sometimes is a positive impact, sometimes is a negative impact. If the prices become too high, the actual jewelry demand starts to come off as well. So it's an imperfect play. It's pretty simple. If you like gold, buy gold.
So, Dheeraj, so I guess you're not shying away from buying gold even after a 30% jump. That's saying something, right? So let's put it all together, because there's too much going on, from the US result season to figuring out if the Fed will be as aggressive as we thought in September when it comes to future rate cuts, to thinking what RBI will do next. All things put together, my question is very, very simple. If this market is to reclaim its all-time highs and continue its northward march, does it have the ammo? Or are we actually looking at very listless, range-bound markets for a while, which we haven't seen in some time?
I think there is a very high probability that we are looking at a more prolonged consolidation. So As you rightly said, the earnings ammo is missing to some extent. Rate cuts are not likely to be as aggressive as what one possibly thought a while ago. And at the margin, the global economy is slowing down. At the margin, looks like Indian economy is also perhaps slowing down a little bit. So the September GST collection numbers were high single digits. It's not the usual double-digit print that we have been used to see. There were probably a few one-offs in September, so let's see how the October print comes. So I think the probability of a listless, slightly more prolonged consolidation is higher at this point of time rather than the usual V-shaped recovery back to the new highs.
Okay, all right. All right, Dheeraj, thanks a lot for joining in. Wishing you, your family, the entire team all the best in this Diwali season, and looking forward to chatting up with you in the time to come as well.
Sure. Thank you. Thank you. Happy Diwali to your team too.
Well, the markets, it appears it's gone back into that buy on dips mode. So we were down close to under 100 points in the initial part of trade itself. The Nifty has pulled back a little bit. The mid-cap index, that's where the bright spot is, because you still have 3 stocks that are advancing for every 1 stock that's declining. But let's get to a couple of banks then. Canara Bank, that's the next management on the show. The asset quality was the best in 37 quarters. The net interest income, though, came in at 8-quarter lows. To help us out with what's the way ahead, we have with us Mr. Raju, the MD and CEO of the bank. Hi, sir. Good morning. And wishing you as well as your entire team at the bank a very, very happy Diwali in advance. And hoping the second half of the year as well shapes up well for you. Well, I'm looking at the numbers, sir, both in terms of your advances as well as deposit growth. Both of them have come down. They're at multi-quarter lows. The scramble for deposits we knew. I think the last time you joined us, you were talking about the loan growth being in that vicinity of around 11 to around 12%. What's the loan growth for this year likely to be at? Point number 1. And point number 2 says there's a scramble for deposits. How does it impact your NIMs? Will you hold on to that 2.93% odd mark?
Regarding, let me say first the credit growth. The credit growth, if you see that sequentially the second quarter, our credit growth is near to the 4% in the quarter on quarter. That's almost 3.78% we have grown. Even in the RAM credit, we have grown in the quarter on quarter 4.5%. The first quarter of this month, this year, and the last quarter of the last financial year. These 2 quarters earlier also I shared with you that we have shed our low yielding advances and we have withdrawn the sanctions and we have taken it back almost 35 to 40,000 crores. That is reflecting in the year-on-year growth of 9.54%. But otherwise, this quarter and whatever the exercise we want to do it in the previous 2 quarters, we already completed. This credit growth in the first time I have seen that last 8 quarters, the credit growth is touching the 4% in 1 quarter, that too from the September quarter. It is a slightly slack season. We definitely, what we have given the guidance of 10% credit growth, and I shared with you twice, so we are expecting that our credit growth will be around 11%. Still I stick to that, our credit growth will be 11% around. And regarding the deposits, for garnering the deposits, I didn't see any problem for the public sector banks, like even for the Canara Bank. Last quarter, if you see that we have grown almost more than 11%. At this quarter, we have got that 9.34% that deposit growth. Last continuously 3 quarters, we are growing incremental deposit and the credit growth are at par at the same pace. The another reason why it is that this quarter it has come down below 10% is you might have remembered that the 666 scheme we have introduced 2 years back and which are coming for the renewals now. We are successful in renewing all those deposits in the 95 to 96%, but some 3 to 4% may go out of the system because of there is an avenues are there. That's the only reason. Otherwise, we don't find. And the last 18 months, we have not altered our deposit rate. That shows that we are very much confident in garnering the deposits. But our main focus again continuing in the retail term deposits as well as the CASA deposit. CASA deposit, if you look at that, SB Savings Bank individual, the first time for last 3 quarters, our CASA percentage has increased 29 basis points. We are in June we were 30.98. Now we have improved to 31.27. And in absolute numbers also, savings bank account itself, in a year on year, it is almost 18,000 crores we have improved. And the quarter on quarter also in absolute numbers, 8,000 crores we improved. So we don't see too much problem for garnering, but there is a pressure on interest expenses.
Got it. So we just wanted to get those 2 points out of the way. Now, gold as a percentage of your total mix, I think the last time we charted was around 15%. And it appears there is traction on that particular vertical. Could you tell us what has been the gold loan growth? If you could tell us what percentage of your book it is, where do you see it headed, and how is that portfolio growing?
Yes, sir. The last 3 years in the gold loan portfolio, we used to grow around 25 to 31%. But when we are reached that our portfolio has crossed 1.5 lakh crore, we thought that we have to take some precautionary because we are I can say that the industry leader in the gold loan portfolio in the India. So we have taken several steps where we have discontinued certain things in the metropolitan cities. We are not lending against the gold against agriculture purposes. We have discontinued our interest subvention for these things in all the branches. And we have strengthened our assessments and all, because once we have crossed that portfolio is 1,50,000. And to compensate this in the metropolitan cities, we have launched a retail product at a much higher pricing and a much lower LTV ratio. Our average LTV ratio in the gold loan portfolio is around 66.73, which is much below than the regulator expectation of 75 to 80%, even including a few of the agriculture. That shows that, but now because of these decisions, our growth has come down from 25 to 30% to 17%. We expect that the 15% growth will continue in the gold loan, which we are aiming only the 15%. We don't want to grow only in this 30% here. That we are very much confident. And the retail product, what we have...
No, I got that. We got that. We have many topics to cover, sir. So sorry, apologies for butting in. Good morning, Prashant here. On credit costs, right? That is where I think you've shown through. Slippages are lower quarter on quarter. Net credit costs are lower on a quarter on quarter basis. How should we read this? Because is this, can it remain at these levels in your opinion? So if you look, for example, look at SMA2 loans, that has gone up. They are about 1.1% of loans as compared to 0.4% of loans Q on Q. So that will need watching as well. So just give us some guidance on asset quality from here out.
First, let me talk about the NPAs, then I'll come back to that SMA. The NPAs, the percentage, because the recoveries and the slippages we could control very much in the current quarter. First time we have touched only 1% of slippage. And our slippages in absolute numbers also, it was only 2,300 crores. As against that, recoveries and upgradation has crossed 3,500 crores. That has given a cushion to us on improving our asset quality ratios. So you look at that just in one quarter, in the gross NPAs, we have reduced from 4.14% to 3.73%. NPA also we reduced from 1.24 to 0.99. Our provision coverage ratio also from 89 to almost 91. This we could, because last 2 years, whatever the decisions we have taken in the underwriting standards have improved, that is giving the benefit now here afterwards. Now let us come to that SMA2, what you are told. In actual purposes, SMA0, SMA1, SMA2 are all much below than the June quarter, but only in 2 accounts. Last time also I shared with the media that one of the central PSU steel industry, that is an exposure is reflecting in the SMA2, and one state government irrigation project, which is also reflecting from SMA2 to, it is oscillating between SMA2, SMA1, SMA0. As on date, that exposure, the state government guaranteed exposure has come down to SMA1. But we don't see too much concern on these two. These two exposures are more, total together is more than 6,000 crores. If I remove that, I will be below that the June quarter. But these two, I am not seeing too much concern. But of course, for the safety, for the central PSU, we already provided 15% provision. And the state government, whatever the guaranteed is there, we don't see any threat in slippages.
Okay. So not seeing any sort of further concern on slippages. Mr. Raju, I noticed, I mean, when you're talking about the credit offtake this quarter at least, retail has grown very fast for you. I think corporate is about 6-7%. retail is growing in double digits. I mean, well over 20-25%. Is this going to continue? And how much of this is secured, unsecured? What is the proportion of unsecured that you have? I'm sure it'll be small as percentage of your overall book. But your thoughts on the unsecured part, and also if you could just break up the loan growth target for the whole year into how much will come from corporate and how much would be retail?
So retail, we are not so active in the unsecured loan portfolio, madam. Out of 1,95,000 crores, our portfolio is only 18,000 crores unsecured. Out of that, actually we give unsecured loans only to our existing customers who are all salaried class and pensioners. We don't give to other than salaried class and pensioners. That together we have exposure around 13,000 crores. And the remaining 5,000 crores is unsecured educational loan. I don't see any slippages in this because we are very conservative in sanctioning of unsecured loans. So the slippages in this is less than 1%. Even as on date, outstanding also is less than 1%. But the second point is retail growth. We have seen a robust growth. That's why just before when I was talking with Prashant, I told that about the gold, that we have introduced, we have discontinued in metropolitan lending against for the agriculture purpose for gold loan product. To compensate that, we introduced a retail product for meeting the requirements of the metropolitan branches, the loans against customers, loans against the gold. That product has kicked very well, and it is showing a robust growth on that. That is helping us in retail growth much than. Otherwise, our housing loan is growing around 13%. We expect that will continue. Our vehicle loan is growing at 16%. That also will continue. Regarding the corporate, actually we are growing in the double digit only. But because of our rejig in the last quarter and the previous quarter, that is reflecting is at 7%. But if you look at that the quarter on quarter, it's almost 3% growth is there in this quarter also. I will see that the 3% growth for the next 2 quarters also. Overall, though what we say that the 11% credit growth, the corporate may grow at 9 to 10%, and our RAM credit will grow at 12 to 13%.
All right, sir, got that. Thank you very much. Wish you festive greetings once again, and thank you very much for joining us this morning. That's Canara Bank at the end of the second quarter. Quickly moving from one earnings call to another, GMR Airports reported a steady operational performance in the quarter gone by. High finance costs, however, dent the bottom line. Net debt has also increased by about 21%. We've got Saurabh Chawla, ED Finance and Strategy of the GMR Group with us. Thanks, Saurabh, for joining in, and wish you a very happy Diwali to begin with. It's been a steady quarter, and also it's been fairly eventful, I guess. Aero tariffs grew in the top 2 assets. Revenue growth in 3 airports, however, has been modest. So can you just walk us through some of the key trends that you observed in the quarter gone by?
We are not a Q1Q play. We are a long-term play. On a Q1Q basis, we always have to take into account also the seasonality. So in quarter 2, the air traffic dips a bit, which gets reflected in the aero revenues. So that's what has happened. But if you look at on an annual basis, our gross income on year-to-year basis for the half yearly, it has grown by 19%. So that itself reflects a very robust growth year on year. Even if I were to look Q and Q, we've grown almost 20%. So I think you need to keep that into account, the seasonality aspect of it in our revenue capturing, given the air traffic flows during the quarter.
No, got that. Could you tell us, explain to us and our viewers, what is the role of AERA, that's the Airports Economic Regulatory Authority, in determining the role of tariffs in aero and non-aero segments? What are the key risks that are playing out? And what has been your appeal with respect to cargo handling fee structure? Where do you stand currently?
No, we don't stand anywhere. AERA is the regulator. AERA determines the tariff, right? So there have been some disputes on the interpretation of certain regulations. And based on that, airport operators had approached the courts. And these were based on certain precedents of the past where the Supreme Court had opined that a regulator can't go against an arbitral award by TDSAT, right? All that the court has done, and we went based on those precedents, we went to the court saying that ERA cannot, appeal against it. They cannot fight against it, and the court opined that no, ERA as a regulator has the right to fight that based on merits, and that's what they had highlighted. So the confusion in the market came from certain media reports, which said that ERA is now, or it imputed that ERA will now also determine non-aero tariffs. Non-aero tariffs are not determined by ERA; they are determined from free market, right? But there are certain elements in the airport play where the ERA plays a role to bring reasonableness in that, and that's how they opine in many of their opinions.
Well, it's a very significant transaction as far as the holding company is concerned with earlier entering. Explain to us the transaction. Earlier, how many lenders were there? What was the cost of borrowing? And what were the finance costs for the promoter group? How will it change from here on? What is the percentage of the promoter pledge on GMR that will come down?
All are something which is either confidential, but and something which will be determined in the future. But overall, let me highlight the substantial portions of 6,000 crores of debt which the promoters have in their promoter entity, which is GEPL. That is getting refinanced by very long-term debt, which will be provided by ADIA. This is actually, honestly speaking, a game-changing, transaction, because usually in India, the promoter debt, which is backed by loan against shares or the shares of the entity, listed entities underlying the promoter entity, they are anything between 18 months to 3 years in duration. And the costs of that are pretty much in the high teens. The NBFC market in India had collapsed with the collapse of IL&FS, and hence the cost of financing had gone up sharply post the IL&FS issue. So all that we are doing is we are now removing that refinancing risk of every 18 months, every 36 months of refinancing that we had to do, every 3 years, 36 months. That has been removed, and with a very long-term capital provider, a very stable capital provider, we are refinancing that whole debt of a little more than 6,000 crores or 6,300 crores to be more precise. The cost of that, which I had already highlighted to you, usually is anything between 15 to 20%, is depending upon the lender, depending upon the time frame, depending upon at what point of time you're taking those loans. Those will compress sharply in this new financing, and it'll come down to the low teens. So that is a very big attribute that will come from this new transaction of refinancing the total debt.
Okay, all right, got that, Mr. Chawla. So just finally, do tell us about the Delhi airport as well. When does the tariff hike come through, and what is the status right now with the regulators?
So as we've been highlighting, over the last 2 odd quarters, the final tariff is expected to be notified by the regulator in the 4th quarter of this fiscal year. So in the time frame between Jan and March, and most likely in March, that will be notified. Very soon, there will be a consultative paper that will be put by the regulator in the public space after they have determined based on the maths, based on their due diligence, based on the recommendation of their independent consultants. They will put out a consultative paper which will indicate what the tariff is, and it will be for everybody to see. So, but the final notification will be there by March of next calendar year. That's our estimate.
Okay.
All right. Thank you very much for joining us and running us through all of that detail. So that's GMR Airports stocks up about 1%. The high, by the way, I was just checking on GMR was 104 rupees. So it's come off very sharply. So 80 odd rupees, but coming off the lows over the last 2 trading sessions. Now, we're going to take a quick break here. We'll come back and connect with the management of Hudco and we talk about their second quarter results as well. There as well, I mean, the stock price sharply off the highs. Conversation with the Hudco management up next.
Welcome back. So we're going over more earnings now, and Hudco is the next company on the radar. If we look at the performance in the quarter gone by, well, disbursements are actually down about 28%. Interest income growth and assets under management came in at a healthy clip. So we've got Mr. Sanjay Kulshrestha, CMD of Hudco, joining in. Mr. Kulshrestha, thanks for joining in, and wish you a happy Diwali. To begin with, let's just try and understand, how this has played out. Your disbursements have been lower this year. I mean, is there a seasonality impact? What's behind it? Because otherwise, AUM growth is up 7% sequentially. So let's talk about business growth. What are you looking at for the full year? And, what explains the discrepancy on disbursements in this quarter?
So if you can see the last year half yearly to this half yearly, I think the disbursement has grown by 6x. And similarly, the loan book has grown by 36%. So it is generally for a financial institutions because it all depends on the pace of the project and the nature of the projects. And you have rightly said the environment and the ecosystem of the project and the progress of the project. Because we disburse funds on very reimbursement kind of basis, so that funds should be utilized in the project. So there is here and there are slightly ups and downs on quarter to quarter basis, but I think it is advisable, it is good that we should look at the figures on year to year basis. And during last year, from last half yearly to this half yearly, on all the parameters, it starts from the disbursement, sanctions, borrowing, cost of funds, resolutions of the NPA, loan sanctions. I think the company has done phenomenally well. Our sanctions has grown by 10x. It was last year, half yearly was 7,000 figures. This year we had achieved 76,000 crores. This year we had disbursed around 21,600 against the 7,000 last year, 3,000 last year. So I think on year to year basis, we are working very well. And if you will see after the end of the fiscal, I think the results will be very outstanding for the company.
Absolutely, sir. No denying that. I mean, the sort of improvement on sanctions is absolutely stunning. And even the AUM growth in this quarter, if I look at year on year, Q2 over Q2 last year, then it's looking very good at about 36%. Plus, I think you're talking about lending to a lot of big projects. So let's talk about overall growth of the book this year. Financial year FY25, what will your AUM growth be, considering the healthy trends that we've seen in this quarter?
Yeah. We had started this fiscal with around 92,000 of the AUM, and now we are standing at 111,000 figure. So it is more than 20% that we had already grown, and we had taken a very sustainable kind of target to reach 150,000 by next fiscal. And for this fiscal, we had taken a target of 1.2 lakh crores, and we are comfortably well placed to achieve this 1.2 lakh crores target, looking at the 1.11 AUM as on date. So there are a lot of projects that we are discussing, and there is a lot of tailwinds across the Indian economy and the Indian infrastructure to achieve that Viksit Bharat mantra of Honorable Prime Minister. And every state had been geared up. So a lot of projects that we are talking, it starts from the south, from AP, Tamil Nadu, Karnataka, then towards the west, then they start from Maharashtra. Then in the central also we are discussing in Chhattisgarh, MP. Then eastern side also, they are all gearing up with good infrastructure, which is cash-based, revenue-based kind of infrastructure projects that the company is working.
Just to get the numbers again, you end this year at 1.2 lakh crores, and the next fiscal you are aiming for 1.5, right? 1.5. Yeah. Got it, Prashant.
Okay, sir, good morning. Thanks for joining us.
Morning. How are you?
All well, sir. Thank you very much. Festive greetings to you and your team. It's good to speak with you. Thank you. Let's just talk about the yields that you are enjoying. What were yields in the second quarter, sir? What is the sustainable level that you're looking at? And also, if you can guide us on both net interest margins and spreads for FY25.
Yeah. I will start from the cost of funding, because yield is a factor of the cost of funding. During last financial year, we had been successfully able to reduce our cost of funding, and during last quarter it was only 6.99, irrespective of the higher markets and the expectation of the rate cuts from the RBI. But I think this is a good season for the rate cuts, and the Fed has already started indicating, and Fed has already deducted some 50 basis points, and we are expecting more in that. And then the Indian economy, Indian budget, the fiscal reserves, everything is putting indication that we will be going towards slightly lower cost of rates, and we are continuously trying to cut down our cost of funding. Then we are also resolving our assets so that the write-offs can be available for the company to improve the bottom line. And we had taken the internal measures also to see that there should not be any compliance cost or very little compliance cost. So we are working on optimization of the compliance cost. So I will come back to your question regarding the yields. We will be sustainable around 9.25, 9.3, and we will be maintaining that kind of yields, because we are into the era where we need that infrastructure should be more viable rather than loading the cost of fund on the infrastructure and making them unviable. We are working and committed that the asset should be more viable. And so we are making our yield at 9.3, around 9.3%, and we will be maintaining that by all the measures. And at the same time, our spreads will be something around 2.25 that will be maintaining, and our NIM will be around 3.3, 3.25. I think these are the sustainable figures that we will be achieving in next couple of years.
Okay. 3.3 to 3.25 NIM, that would be an improvement from where you are. Again, can you put some timelines to it, sir? So are you saying 3.2 by the end of this year itself?
Yeah, by the end of, because you see, the company has grown by 39% during last 1 year. So it has put some pressure on the yields, and the income has just started coming out of these assets. So you may be looking some good improvement in the quarter 3, and I think we will be settling in quarter 4, because all the loan books will be revenue earning.
Yeah. There, just to take up on that point, there are some news reports, sir, which suggest that the decision on including not just Hudco, but companies like IREDA also under Section 54 EC is likely on the back burner, and there is a deliberate delay in the decision to be made. Could you tell us what are your thoughts on this, and have you heard anything?
I think we are very positive about that, because we had already requested, because finally the decision will be taken by the government, and we had put in our case, and we are pursuing with the Finance Ministry. We are very hopeful, because these earnings are coming out of the home proceeds also only, and we are trying to put in that, since the PMAY is in PMAY 2.0 program is launched, and it is very ambitious. We want that the funds, the counterpart funds which will be required by the states, they will be extended at the cheapest price, so that it will be the lower cost for that affordable section of the housing. So yeah.
Yeah, exactly on the cost. This, if at all you get 54 EC and you can issue these infra bonds, by how much does it reduce your cost of funds? Just trying to understand what is the benefit in terms of the interest rate differential that you will get if you are able to issue these bonds.
Actually, if you see the weighted average, the effect may come after 2 to 3 years of the time, because this year we may be targeting around 2,000 crores or 3,000 crores. There are existing companies who are bigger players than us, and the total market of 54 EC is not more than 18,000 to 20,000 crores. So in initial years, it may be 2,000, then we will be extending towards the higher from marketing and the consumer satisfaction. All these measures has to be taken to attract the 54 EC market.
And sir, last point is on asset quality, just 30 seconds left. You've improved your gross NPA from 2.4 to 2%. Is that with the help of high write-offs? What's the guidance on asset quality and whether write-offs will continue to be high?
Gross NPA has came down to as good as 2% and the net NPA is 0.31%. And we had taken a commitment that we will be resolving most of these assets by 2026. During this fiscal also, we had a target that we should be resolving another 500 crores of the assets. So it will be coming between 1.8 to 1.9, the net NPA, and around 1.75 to 1.8% of the gross NPA.
All right, we'll leave it there. It's a pleasure, sir. Thank you very much.
Thank you
Diwali
so much.
greetings to you once again, and I look forward
Wishing
to
you
our
a
next
very happy
discussion.
Diwali to you and your viewers. Thank you so much.
Thank you very much.
Namaskar.
Well, I think we are down 60 points, and which means it's an improvement from the day's low. The market's actually picked up quite nicely, and 24,400 is where we stand at. Market breadth, by the way, is now pretty much one-sided. You've got some 2,000 stocks higher and some 400 stocks which are lower. So 5 advances to 1 loser. That's essentially the picture. I just want to highlight a few names which were not in the mix when we looked at market open at 9:15. Poonawalla FinCorp is up a full 8%. So that rebound continues. Let's just quickly put these intradays up and that'll tell you what's happening. You've got, what is CGCL? This is, you've got a 13.5% pop on this name, CGCL. You've got Force Motor, of course, a big mover. Reddington is up about 7%. Reddington should come up, was not there, nowhere in the picture in the morning. Poly Medicure is up 4.5%. We had the management with us yesterday and almost 2,700 now. JBM Auto is up about 5.5%. That should come up on your screen. HCC continues to hold on to some of these gains as we look at markets. And look at something like a GHCL, which is up 9%. So that's a pure soda ash maker, and that is coming up with decent moves. Sudarshan Chemicals is another one. I mean, you had that acquisition, stock went up sharply, then it corrected sharply, and Sudarshan is coming back with about a 3% gain at this point in time. Mitesh is with us with what to make of the market and what trades he wants you to take. But what we'll do is we'll take a break here. Mitesh will be with us on the other side. Stay with us.
Welcome back. Well, Concor is the next management on the show. The company reported a sluggish past quarter. The volume growth continues to be below its guidance. To discuss this and more, we're joined by Mr. Sanjay Swarup, the CMD of the company. Hi, Mr. Swarup. Good morning, and thanks a lot for joining in. Well, when you joined earlier, you were talking about a volume guidance of around 18 to around 20%. Now, at the half-year mark, you're trailing on both the EXIM as well as on the domestic volumes. So break it up for us. Is there a revised guidance you want to give us on both these two segments? And for a consolidated entity as well, what should the volume guidance look like now?
Good morning and happy Diwali to all of you
happy
and
Diwali,
your viewers. I would like to compliment the festive attire of Prashant, Surbhi and Nijil, all three of you.
Thanks a lot, sir. They're feeling good here in the studio festivities.
Yeah.
Please go ahead.
Yeah. So as far as your question is concerned, of course, the volume growth has been around 3.5% in EXIM and around 15% in domestic. That gives an overall growth of 6% for the first half of this financial year. This year has been challenging for us as far as the EXIM is concerned because of the various geopolitical reasons all of you are well aware of. And domestic also, in Q1 we posted a good growth, but in Q2 it was slightly muted because we got very good rains this year in Gujarat and North India. So because of that our loading suffered. But now I'm happy to inform that loading is picked up in domestic very well. In this month, we are doing quite well. And Exim also, there are firm indications that we are going to get very good business of rice exports particularly. And imports are also picking up.
Mr. Swarup?
So, of course, yeah, it just... It is challenging,
Mr. Swarup,
I will not like to change the guidance.
So you're holding on to the guidance of 18 to 20% overall volume growth for this year. Are we understanding that correct?
Yeah, I'm holding the guidance for 15% growth in Exim, 25% in domestic. That makes overall 18%. I'm holding on to that guidance now.
Okay. All right. Got that. You know, what about realizations? Could you tell us how that is shaping up? It's good to see volumes are coming back, but how have realizations been both on Exim as well as on domestic volumes in the past quarter? And any revisions going ahead?
Realizations, if you see, realizations have been quite good. We posted a very good net profit of growth of 4% year on year. And despite the 25 crore hit that we took because of the net of tax, because of the exceptional item, because we settled a claim of Vivad Se Vishwas of Government of India. Despite that claim, we posted a handsome profit. In this financial year, Exim is showing good profit, and domestic also, we are getting both side movements now. So empty running is coming down. So we are very hopeful that we will be able to further improve our results in the remaining half of this financial year. And we will be posting a very good realization, very good profit also in the financial year.
So how much higher will it be, realizations, in comparison to your past quarter?
Our realizations will be improving because there will be various reasons for that. First is the customer centricity and operational excellence that Team Concor is practicing. Because of that, our realizations are improving both in Exim and domestic. Then we are putting North India on for the movement towards from North India to Nhava Sheva. Of course, the DFC is not commissioned up to Nhava Sheva, but we will be giving the benefits of double stacking and DFC to our customers of North India, because we have a terminal at Varnama, which is connected to Indian Railways, and DFC connectivity will be happening by the end of November. So from November end, we will be starting double stack trains from North India up to Varnama. From there, we will take single to Nhava Sheva. It's a distance of only 400 kilometers. So that will the benefit of predictability and cost will be coming to the customers of North India for movement towards Nhava Sheva. Secondly, we in domestic, we are getting a very good demand. Then we are going for bulk cement transportation in tank containers, and we have ordered tank containers from our sister PSU, Braithwaite Corporation of Calcutta. And yesterday only I had a meeting with the CMD of Braithwaite, and from December we are going to get supply of tank containers, which will give a further boost to our domestic loading. There is a lot of demand. We are in touch with our customers, and in exports also, as I mentioned earlier, rice exports are going to pick up now.
Yes. Mr. Swarup, could you give us a margin number though? There was a moderation in railway cost as well as land license fees. That aided your margins in the last quarter. But going ahead, what kind of a margin number should we look at very quickly?
Yeah, we will be able to, we have posted an EBITDA of around 25 to 26%. We are very confident of maintaining this EBITDA level, because railway cost will be, we are controlling because of the reduction in empty runnings that I mentioned earlier. Land license fees issue is sorted with railways, so it will be at the same level. So we will be able to maintain EBITDA of 25 to 26% in the,
Thanks a lot, sir, for joining in. Wishing you all the best for the second half of the year. You're promising some good numbers. We look forward to delivery. Well, time to shift focus then from the equity market to the commodity space. Manisha joins us to help us out with what's going on there. Manisha.
Well, thank you for that. I'm looking at the gold prices, which are trading at yet another all-time highs, $27.80 an ounce. And that brings us to nearly $750 an ounce of a jump up in this year itself. Well, what you are seeing on your screens is absolutely an all-time high that the gold prices have seen. And this is after very many years that we are looking at all-time highs in gold and silver. And this is happening during Dhanteras and Diwali. Well, the latest trigger comes in from the soft US labor data that came in yesterday. And in any case, there's a lot of uncertainty in the international markets, given the fact that the US presidential elections are not too far away. Well, that is 5th November. And then it is also about the November 6th and 7th, which is the US Fed meeting, where the next interest rate cut is coming. But more than that, it really is going to be about the guidance for the months ahead that the street will be looking at. Well, it also is about ongoing geopolitical tensions that has led to some safe haven buying demand into the gold and silver. And then Indian demand investment also seems to be on the stronger side. Well, if you look at the MCX prices, we have seen an all-time highs into this one as well, inches away from 80,000 mark on MCX. On ground, though, if you were stepping out to buy physical gold, the prices are trading at around 81,000 or so. That is because you will add nearly 3% GST and 6% import duty onto that. Also, another interesting thing is that even as the gold prices are trading at an all-time highs, and while last year there wasn't enough demand, so it was at $4 of a discount in the Indian markets, but this week has seen $1 into a premium, so that $5 of a jump up is what you have seen in the Indian markets. There have been those pictures of long queues of people trying to buy gold and silver coins because of Dhanteras, and that really has led to sentiment in the international markets as well, growing quite on the stronger side there. I want to tell you that the global central bank buying has been on the stronger side and investment demand has surged. So whether it's about futures, funds, hedge funds, ETFs, the gold buying has been quite strong, and that in turn also has supported the sentiment. I also want to take you through on what we've done on charts and sense of the prices here. This is what we've done in the last week. 2.5% of gains in case of gold, 4.5% up on month, 35% of gains in this year until now, and 40% of gains is what you are pocketing if you bought gold last year same time. Similar gains coming in for silver as well. In the last 1 week, we've seen silver prices gain up by the tune of 2%. But in the monthly basis, silver is gained up by 10% there. On a year-to-date basis, 45% of gains. And in last 1 year, 50% of a jump up is what silver prices have seen, with an assumption that going forward, the next week, 10 days can be very uncertain, and you could be looking at higher highs continuing in case of gold and silver.
Okay, all right, Manisha, thank you very much for that. Well, with that, we have to take a very, very quick break. We'll come back on the other side, and then it'll be time for a special Sambat Market Masters conversation. Lata will be talking to Sridhar Sivaraman of Enam Holdings.